Hey everyone, it's Stefan Angelini from the Investor Types. Thanks again for listening to us. We're talking about credit investments and we're talking about investing with one of Australia's best names, and this is LaTrobe Financial. We're talking to their Chief Investment Officer about how he takes on capital, which is what happens with your term deposits or deposits as you go into this non-bank or credit facility, and then how they decide to lend it out, whether it be to business owners, property developers, self-managed super funds. If you are considering trying to outstretch a term deposit but want a fixed term nature for your cash, you're not looking to chase too high returns but you're happy to take on a little bit of extra risk, as it's called, this might be a great episode for yourself. Now, before we get into it, it's a really juicy one. I just want to remind you that it's general information only. Please don't consider it as personal advice. If you want to consider an investment like this for yourself, please go and consult your own financial planner. Other than that, enjoy the show. Reach out to me with any questions. Let's get into it. Hey everyone, it's Stefan Angelini here from the Investor Types podcast and YouTube channel. Thanks a lot for joining me for another episode. We're here to talk about non-banks and how non-banks may invest your money if you ever invest with them, but even getting loans from them and what that means. So we're here talking to Chris Andrews from LaTrobe Financial. Chris, thank you so much for joining me, mate.
Great to be here, Stefan. Thanks for having me.
Mate, amazing. So Chris is the Chief Investment Officer at LaTrobe. LaTrobe's probably been one of the biggest names that's popped up around Australia in the last few years. Now touted as a really big lender to both individuals who might be business owners or developers as well who are getting funding. But they've released a lot of lines of, let's say, credit term deposit-like products, not quite term deposit, but in the fixed income space. But we're here talking to Chris to give us just a little bit more insight into what that all means. Chris, mate, we're in the coronavirus at the moment, and I have not seen someone's face pop up more than yours for presentations. Hats off to you. Why do you keep doing so many presentations in the current environment?
Oh, Stefan, look, it's a fundamental conviction for us, and one really that we learnt a lot from our experience in the global financial crisis, which is when markets are volatile, when there's turmoil in the global economy and global markets, investors have an absolute hunger to know that their managers are focused, that their managers are constantly checking their portfolios, stress testing their portfolios. So really, we just want to be as transparent as we possibly can. And I think Stefan, I know you'll be familiar, and if your investors are familiar with our monthly portfolio reports, which we've been doing for many, many years, I'd like to think that those are probably the most transparent reports in the market in terms of giving a great amount of detail about all of our portfolio holdings. So really, it's a continuation of that same strategy of being as transparent as we possibly can for all of our investors.
Yeah, no doubt that would keep you super busy, as it does with me, keeping all my clients updated. But being in your role as a CIO, it would require a lot of work, but I'd love to know, so how did you get to that position to be CIO of LaTrobe Financial?
Yeah, I actually joined LaTrobe in 2006, Stefan. So it was not too long before the global financial crisis.
Time.
We also so look, it was a fascinating time, but it was also a difficult time for financial markets, and It was really interesting to see up close the consequences of poor decision making by managers and by investors, and that's around funding models, around liquidity management. We were, in fact, in some ways, you talked about how we've enjoyed some success in recent years. To a large extent, that was born in our experience through the global financial crisis. We were one of the few managers to get through that period with a flawless record of liquidity, return of capital, and so on. So, look, at that time, I was in a legal role, but I moved over to head up the credit fund in 2009. So it's been a heck of a journey.
All right. And so as a CIO, what are your main roles? What do you do?
Really good question. If I think about LaTrobe Financial, our approach to investment is not about one person, whether it's me or anyone else, making big bets on the direction of the economy.
Yep.
It's instead what we do is we build really rigorous industrial strength processes. That's at the core of what we do. And what we're looking to do is generate highly diversified portfolios of really, really high quality, always mortgage secured loan assets. So, we've been in operation since 1952. So across that time, obviously, we've seen an incredible array of economic environments. So we keep refining, improving our approach and our insights as markets evolve. So really, as CIO, my focus is working to ensure that all of our investment, that all of our portfolio construction disciplines, if you like, that they're all in place and that our portfolios are continuing to perform for our investors.
Okay. So when people give you money, you are the one responsible for making sure it's secure, safe, and they're going to get the return they're promised. Who are these people? What kinds of people do you manage money for? People and institutions.
Yeah, that's right, and it's a really good point, Stefan. So we're well recognised, I think, as having the most diversified funding base in our sector, and what we do is we apply the same asset selection disciplines across our entire book. So really, our focus, whoever the investor is, we want to be an excellent steward of their investment capital. So when we think about who these investors are, we manage $3.6 billion in investment funds under institutional mandates. So that's 3 of the big 4 banks, 2 regional banks, 3 household name global banks. All of these have been excellent long-term supporters and investors in the business, in some case for many decades. Our credit fund, well, that's what most of your investors will be familiar with. That holds about $5 billion in assets under management. We manage funds there for a variety of investors, for fund managers, family offices, high net worth individuals, right through to everyday, if you like, mum and dad investors. We manage for global institutional investors. So I'm thinking here of pension funds, sovereign wealth funds, fixed income managers, through our capital markets program. So we have $4.4 billion outstanding in residential mortgage-backed securities. We've attracted a bit of attention in that sector because we've recently settled the largest securitization transaction globally. So that's $1.25 billion since the coronavirus began. And that's on the back of the really strong interest that these institutional investors have in our loans as safe harbour assets, if you like, in times of market volatility. Okay, so we like having a very
there's sort of 3 different types of
3
people,
key buckets.
3 key buckets. In big institutions, funds, the everyday person, family, wealth groups, essentially.
Yes, that's correct. And look, I say again, whoever the investors are, in one sense, when we're approving assets, we're agnostic to all of that.
Yep.
Our approach is to be absolutely rigorous in our asset selection, regardless of where the funds are going. And look, none of our investment portfolios that work for any of those institutional investors or in the 48-hour, the 90-day, the 1 year, the 4-year accounts in our credit fund, none of them have ever lost a cent of investor capital. And, for a manager across 7 decades, that's a rare accomplishment and one that we take very seriously.
Yeah. So tell me, you've got the banks that invest into a non-bank. Is that right?
Correct.
All right. Well, that's interesting.
well,
let's chase that.
I guess at first blush it might seem so, Stefan, but we have a particular expertise. We're a credit specialist. We focus on borrowers who don't neatly fit, if you like, the primarily automated credit assessment processes that the big banks like to operate, and that allows them to generate scale. And that's been a really effective and efficient model for them for many, many decades. Yep. But it does mean that there are many, many cohorts of really good quality borrowers. Think of SMSF borrowers, for example, but think of the self-employed, think of borrowers who are not resident in Australia. There are whole cohorts of borrowers who don't get good service from those mainstream banks just because you need to dive deeper into their credit to get an understanding of whether they're a good credit prospect. So that's how we differentiate ourselves, and that's why we get such terrific support from the banks, as you say.
Yeah. And look, I don't want to say that I'm a good lender, but I've had to use LaTrobe many times. I'm self-employed, therefore the big banks don't like me. I've tried to borrow money through my self-managed super fund. Big banks wouldn't do it. LaTrobe, how you going? Thank you very much. But also from developing property as well. LaTrobe have built up a sweet spot or a niche in that market, which has been fantastic because over the last, say, 5 years, developers have found it very difficult to get the traditional method of funding. And LaTrobe as a non-bank has slot in there very nicely.
Yeah, so that's that you're articulating really well, Stefan, what we try to do in the market, which is to find those really good quality borrowers like yourself, who are good credit prospects, who from an investor's perspective present a really strong risk return profile.
Yep.
And by targeting those borrowers, we can deliver service to the borrowers, which is outstanding. We can assist borrowers and play a role in that market, but also leverage those borrowers to generate really good returns for investors. So it's, if you like it, everyone wins under that model.
Yeah. So when I borrow my money from LaTrobe, who am I borrowing from? Am I borrowing from all those investors that you spoke about before?
Yeah, any borrower who comes to LaTrobe Financial will have their loan ultimately funded by one or more of those investor buckets, if you like.
Yep.
Yeah, it is important to remember, to keep the legal structures clean and simple and certainly transparent. LaTrobe Financial is the lender. So when investors trust us with their funds, our role is to ensure that we maintain consistently high standards of asset selection and honestly, really high levels of service to our borrowers so they keep coming back and we can keep building our portfolios.
Yeah. So LaTrobe now, LaTrobe got bought out a few years ago by quite a large company.
That's right. So we're 80% owned by the Blackstone Group out of the US. So they've got $585 billion US in assets under management. They've got particular expertise. They're known as a private equity fund, hence their investment in LaTrobe Financial. But they also have a really deep expertise in property and in credit. So it's a really good strategic alignment for us. Their instructions to us, if you like, they said, we invested in this business because we love your approach, your disciplined approach to credit. So whatever you do, don't go changing your credit jaws. So we've certainly stuck to our knitting since they've come along. That's been really good. It's been a really strong partnership for us.
And I could imagine, just from how much I've seen your name everywhere and how much I've seen you pop up, LaTrobe would have been growing a lot over the last few years, probably getting to be one of the largest non-banks in Australia, if not the largest non-bank in Australia. What are some of the main investments that you manage over at LaTrobe?
Yeah, so the first point I'd make, and I just want to go back to some observations you were making earlier, Stefan, about the difference between LaTrobe Financial and the bank. So firstly, we're not a bank. We're regulated by ASIC, not by APRA. So our investments are not subject to the federal government's bank deposit guarantee. And I've got to say, we've got no ambitions to become a bank either. So I'm really clear about that. So, so that being said, we all know that bank deposit rates have been very low for years, well below inflation. And we don't, and I think most commentators don't see that changing anytime soon. So that means as an investor, if you've got money in the bank, you're actually losing ground inexorably month after month, year after year. And in our view, that's unsustainable. Mm-hmm. What we do is build diverse portfolios, high quality assets. As I said, they're loans. It's really simple in many ways. They're loans to borrowers secured by a registered first ranking mortgage. And through these assets, we aim to preserve capital and generate reasonable returns month after month. So we've got a variety of investment offerings that let investors choose the duration, if you like, that suits them. So I mentioned before, 48-hour account, the 90-day notice account, a 1-year account, and a 4-year account. None of those have ever lost a cent of capital, as I said before. So we're focused on consistency. That's been our hallmark, and we're absolutely focused on that for investors. We also have, for more active investors, we have Australia's largest and most robust peer-to-peer offering. So that's an offering that lets investors select individual loans. So, they could potentially invest, Stefan, in one of your developments if they decided that suited their own needs and objectives, and they could build their own portfolios of mortgage-secured assets. If we were to think about the current returns on offer, just as to give an indication of where we play, so the 1-year account or 12-month term account, as it's sometimes called, that's currently paying a headline rate of 4.7% per annum. It's a variable rate of return, but it is one that we manage over time to be pretty stable. So, I guess all this boils down to, Stefan, what we're trying to do through this type of offering is give investors a genuine alternative source of income.
Yeah, beautiful. And when you've got term deposits that are not returning what investors would hope for, I guess the best thing about LaTrobe is you've got the reputation of being able to consistently deliver on what you promised, which is good. And, your rates don't always stay as high as they have been. They have dropped. And recently they've dropped. Is that right?
Yes, so they are variable rates. So they will over time reflect what's going on in interest rate markets. But we do hope always to hold that sort of premium level of return. And we do that by targeting those borrowers, as I've said before, who don't get good service from the big banks. So we have found, we've been in this business for 7 decades, and our fundamental proposition has been the same. So whoever the investor is, whether it's an institutional investor or an everyday mum and dad investor, for us, that's irrelevant. Our value proposition is the same. First, preserve capital. Secondly, generate a consistent, reliable monthly income that's at a premium to what they can get from other income sources.
Yep. So Chris, just so I can get my head around it. So let's say I've got $1 million or $100,000 and I want to give it to LaTrobe. Say,
Yes.
LaTrobe, I'd like my fixed return for this period. Please use my money as you wish. Chris, I've got all my faith in you. And then you say, all right, well, so that money is going to go into it's going to go into a pool of funds with everyone else. Everyone's all in the same bucket, and then you determine who it gets lent out to. So it could be both to people wanting to develop property, people wanting to purchase who are business owners, as well as people who are purchasing through their self-managed super funds. Does that sound about right?
Yes, it does. So what you're talking about there, yes, we have an investment mandate. And what that investment mandate does is ensure that we don't overexpose ourselves, for example, to construction and development loans.
Yes.
We love construction and development loans, but in our 12-month term account, our maximum exposure is 15% of the portfolio.
Mm-hmm.
We want to build a diversified portfolio, not load up in one particular sector that might, for whatever reason, enter difficulties. So that's where we start. Our starting point is to build. Yeah, exactly. And what we want to do then is select individual loans that are of the highest quality that generate the portfolio. So then, it's the classic 5 C's of credit that we apply then. So we look at a borrower's character. For those who've been involved in credit in the past, this really is the decades-old approach that a really good credit organisation will focus on. So we look at an applicant's character. Are they good credit risk? Do they have a strong repayment history? We look at their skin in the game, their capital. We require a minimum of 25% equity from all of the borrowers in our credit fund. We look at their capacity or their ability to service the loan to meet their repayment obligations. Now that's a very regulated activity in Australia. Like the banks, we hold a credit license, an Australian credit license from ASIC. And we're bound by the obligations, the responsible lending obligations of the National Consumer Credit Protection Act. So when we think about a borrower's capacity, that's a very regulated activity. We think about the conditions that we can put on the loan, and the purpose there is to better secure investors' position. And then finally, and this is the area, Stefan, that investors often look to first. They think about the collateral security. Now, collateral is certainly critical. It's one of the 5 C's, but I often remind investors and advisors it's only one of the 5 C's. What's our approach to collateral? Well, we lend to a maximum of 75% of the value of the security property. We like a strong margin for safety. We don't do large loans. We don't take specialised assets as security properties. We prefer assets that we can sell into a really broad and deep market in the event that we're required to take possession. And of course, that can happen if a borrower defaults on their repayments. So, look, I say again, 7 decades has shown us that if we're really disciplined in the execution of this strategy, we can deliver outsized returns for investors. And we can do that with an incredible resilience to what's going on in other markets. So it's been a very successful approach, this sort of bottom-up, if you like, fundamental portfolio construction model.
Yeah, I'd really like to go back to the peer-to-peer lending because it's been getting so much attention recently. A lot of people are talking about it. There's a lot of different platforms out there that are doing it. So how does the LaTrobe platform, is it essentially someone can put their project up on LaTrobe and another group of people can come in and choose to fund that? How does that work?
Well, first we have a borrower come to us and we assess that borrower as we assess all the borrowers who come to LaTrobe. So we've got to be able to satisfy ourselves that borrower is a good credit prospect. Assuming that the borrower and that the project, if it's a construct, they're not all construction and development loans, but they are, some of them are construction and development loans. So assuming that they are approved, they can then be put onto what we call our investment marketplace. So investors can go online, that's available on our website at any time, and have a look at individual loans and invest in those individual loans. They can research, if you like, their peer-to-peer opportunities before they invest.
Yeah.
Now, the benefit for investors, obviously, is they get to choose the assets they're investing in. They can often generate a higher yield than through our portfolios. The flip side, of course, is that they don't get the same diversification benefits that the portfolios generate. So the risk profile is slightly higher. And obviously, Stefan, the most straightforward analogy is an investor choosing an individual stock on the ASX to purchase versus investing in a diversified portfolio of stocks run by a professional manager. So from that end, we're really pleased to provide our investors with the opportunity to choose the mode of investment that suits them and suits their own circumstances and preferences. It's not unusual for us to see investors, in fact, have some funds in one of our pooled accounts, perhaps our 12-month turn account, and to set some funds aside to invest in select peer-to-peer opportunities, if you like, a sort of a core and satellite approach that they take to investment with us. So that's really interesting too.
I guess that's what a lot of people don't consider. When you look into credit markets and you do see a high return, a lot of people get, they see the flashing lights and they run towards a light. High return, let's do it. But it does take on more risk. And the diversification, especially when it does come to credit markets, is so important. And I guess having an expert team there who've done this for so long to manage that is of utmost importance. You may pay for a little bit. You may not earn as good returns. But essentially, if you're looking for that fixed return, it gives you that safer option.
So diversification has been described, Stefan, as the one free lunch in investing, and it is absolutely true. Your ability to control the risk in your portfolio and generate repeatable income, diversification is absolutely key to that.
Yeah, beautiful. So this show, Chris, it's called Investor Types, where we help people identify, what's the right kind of investment for them if they're looking to get into, say, a fixed credit or a credit investment, which may be a specified term. If someone was to come to you and say that, look, Chris, I want to get involved in some fixed income investments with LaTrobe, what would be their personality or their investor type?
Well, we've discussed sort of some categories of investors that we deal with already. When you think about it, though, our fundamental investment objective here at LaTrobe is very consistent across our portfolio. So whoever our investors are, whether they're the largest institution or the smallest everyday mum and dad investor, they want their capital returned to them in full, and they want to generate a consistent monthly income that is a reasonable margin above the rate of inflation. Traditionally and predictably, we see a lot of people at or near retirement age who are looking to protect their capital from market volatility. They're looking to manage sequencing risk, and they're looking to generate income for living expenses. Interestingly, though, and particularly as we've rolled out some of our online platforms and perhaps this peer-to-peer offering as well, we're seeing a lot of younger savvy investors, and really they're coming to us simply because they're dissatisfied with the rates of return from other income offerings in a world where base interest rates are so low. I'm always, though, and I've probably said it a few times already, Stefan, I want to really stress that whoever the investor is and whatever portfolio you're talking about with LaTrobe Financial, our commitment to those same levels of investment discipline, of transparency, as we discussed earlier, of professionalism, also, though, hopefully, of friendly service, they remain the same.
Yep. Okay. I see it as though if it's almost like, because it's a term investment, you've got to be willing to give your money away a lot of the time and not ask for it back before that term is up. So be willing to have that money gone, but definitely it is that security in a portfolio and believing in someone that will hopefully pay you back. You're not lending to Bob, your next door neighbor. You're lending to a reputable business that's been around for a long time, headed up by a very great man. And that's the kind of investor that if you wanted that long-term, that income approach, albeit it is a more risky, but then say a term deposit, because term deposits, as you spoke about before, have that government backing. They're less than $250,000. They are government secured. So you don't fall into that same banner. But look, I think LaTrobe's an amazing business doing amazing things. Keep marketing the way you're marketing, because I see the LaTrobe banner everywhere now. And if you can, Chris, keep supporting the mighty Collingwood Magpies.
I thought we'd get to that at some point, Stefan. I'm sure. Look, isn't it great that as a country we're now on the cusp? I see our NRL friends are back in the fray already, and it won't be long before the AFL's back too. And I think, honestly, given all the tough year that 2020 has been, it's great to see some of these more normal pastimes starting to enter our minds again. So I'm glad to hear you with the pies.
Yeah, go the pies. Thank you, everyone, for joining us on the Investor Types. We hope you've learned something here about credit investing, going for that fixed income return. Chris, thank you so much for giving up your time. I know how busy you are. I really look forward to hopefully chatting to you again soon.
It's a real pleasure, Stefan. Always happy to talk.
All right. Thanks a lot for that. If you've got any questions, feel free to reach out. Look at LaTrobe Financial's website. They've got plenty of information there. If you've got any questions about the podcast, feel free to leave a comment below. Otherwise, reach out to me, stefan@angeladvisory.com.au. Chris, thanks again, mate. Everyone listening, I'll see you very soon. Thanks a lot. Bye.
Thank you all.